Welcome to the India FinTech Diaries, the only podcast focused exclusively on the Indian fintech market. I'm Elroy.
And I'm Hemant. In each episode, we dive into the latest trends, ideas, innovations, business models, and personalities that are shaping India's fintech landscape.
We also invite amazing guests who are innovators and industry players that are driving the change that is helping make financial services more modern, innovative, and inclusive in India. Come join us as we explore the changing landscape of fintech in India. Welcome back to India FinTech Diaries, where we decode the infrastructure, ideas, and people shaping India's fintech ecosystem. I'm your host, Elroy.
And I'm Hemant. Today, we are diving into a part of the lending stack that doesn't always get the spotlight, but is absolutely critical to the sustainability of the ecosystem: debt collections. As India's digital lending ecosystem has expanded, particularly unsecured lending and new to credit borrowers, the importance of efficient, ethical, and compliant collection has never been greater. In fact, collections is where the real economics of lending often get tested. You can acquire a customer quickly, but if you can't recover capital efficiently, the entire model begins to break. And yet, for decades, collection has largely remained a fragmented and low tech function, heavily dependent on agencies, manual processes, and sometimes practices that regulators and customers are increasingly uncomfortable with. That's where today's guest comes in. I'm pleased to welcome Ananth Shroff, co-founder and CEO of DPDzero. Welcome to India FinTech Diaries, Ananth.
Hey, thank you so much, Hemant, for this.
Anant, to begin with, can you give us a brief overview of your background for our listeners? I'm particularly interested in a journey from Setu, which actually sits at the infrastructure side of fintech, and how that led to collections and what drew you to this problem space.
Yeah, so let me give a very quick background, right, on where we started. So my first job was at a telephony infrastructure company called Exotel. It's a cloud telephony platform, and that's where I started my career building with voice APIs, right? So worked with a bunch of early stage companies like Ola, Uber, etc., and saw a big change in the Indian ecosystem, right, when it comes to how can you change the last mile. And post that, then I moved on to Setu, which is a fintech infrastructure company. And here it was a very different journey, right? So we had a pitch deck that said how India must change and how the credit penetration is like a real problem in the country, right? And our idea was to sort of convert every app into a fintech app, right? By building the right foundation. And that's where I picked this charter called as Bharat Bill Payment System, BBPS, which NPCI wanted to sort of launch and enable consumers like you and I to make bill payments on apps like PhonePe, Google Pay, Paytm. So there I launched categories such as loan repayments, insurance payments, school fees, housing societies, etc. And within 18 months of launch, we had roughly about 24,000 merchants transacting across apps like PhonePe, Google Pay, Paytm, and about 20 million monthly transactions and over $1 billion of GTV moving through the network. So that was how we started, and that's my first exposure to a public infra building and really what it takes to set up a network like that.
To start with, Ananth, let's take a step back and see what's happening in the lending space. In December 2025 Financial Stability Report, RBI indicated that gross NPAs are at historic lows at just 2.1%. However, in the same report, the RBI also noted that more than half of retail loan slippages are coming from unsecured loans. And when you look at private banks, almost 76% of slippages were from unsecured loans. And when you shift the lens to fintech, the picture is not prettier. The segment is growing at about 36% per year, but has a concentration of more than 70% in the unsecured loan. So, in net summary, even though overall banking system NPAs are currently low, around 2% of total loans, the stress signals are disproportionately concentrated in the unsecured portfolios, which are the fastest growing portfolios. And does that suggest that lenders will increasingly need more sophisticated data driven collection infra going forward? Or how do you see it?
So if you look at the change that has happened from the past, right? So previously, a lot of acquisition of a loan happened through physical verification, right? So the tax was higher. The lenders took a lot of documents in order to process a particular loan, right? And these loans were also being verified at the doorstep, right? So there was a physical address verification that happened. And more than that, I don't know, but there was also this concept of guarantors or someone to put in a surety for a particular loan, right? All of these checks and balances were in place in the pre digital lending era, right? So that sort of made every loan so watertight that the delinquencies were lower. But today, fast forward, if you see what has happened, right? There is digital lending that's scaling. And what's happening on digital lending, right? It's today getting a loan is faster than getting an order delivered on Zepto, right? You download the app and you upload a bunch of documents and money is in your bank account. Look what has changed, right? So today documents are being processed digitally, right? And decision is being made in under 60 seconds. And when that happens, definitely there are a lot of failure points, right? One such example is, if you look at it, right, I have my Aadhaar card and there is an address in my Aadhaar card, but I don't live in that address anymore, right? So
Right.
if there is a need to go and visit the borrower, it's impossible today to visit that borrower. So if collections does not change, right, and today collections, the entire infrastructure is still built for the era of the past, right, where the physical address was verified and the loans were high ticket and the volumes were low, and hence these agencies that exist across the country solved for that problem. But today the world has changed, right? So today we are in a digital first world where disbursals are happening in seconds and the volumes are scaling like crazy. If the collections does not evolve at the same pace, and if there is no technological advancements that happen in collections, right, collections will never be able to even cope up for the speed of lending, and we are going to see a slowdown, right? So if you look at the recent measures taken by RBI, right, the RBI changed the risk weightage. Why? Is simply because NPAs were scaling faster, right? If the growth has to be sustainable for us as a country, then collections has to go through a massive shift. Is how I sort of look at the landscape right now.
And Anand, maybe a related question, right? Like you rightly pointed out, historically, collections has always been treated as a back office function. And this was typically done by outsourced agencies, right? Now, when portfolios start scaling up massively thanks to digital lending, where hundreds of thousands, even millions of borrowers start coming on board, and regulators, on the other hand, also start tightening compliance around recovery practices, that entire model of outsourcing to agencies starts to break down. So, how do you see the industry mindset shifting today in your interactions with lenders? Are lenders starting to think of collections more as core infrastructure rather than an operational afterthought?
So I have this very interesting thing that I keep telling my team, right? Collections is like a stepchild of lending, right?
Yeah.
It is unfortunately still thought of an aftermath, right? And not really thought about it from a point of how can collections enable scale, right? So even today, if you look at it, there has been some innovation that has happened. And look at what is the innovation, right? Previously people used to call over the phone, and now people are calling through a dialer, right? The collection agents who are in the system are now using a dialer to make a call, right? That is the innovation that the industry has seen. The other innovation the industry has seen is probably using WhatsApp, right? So if you look at it, lenders today have equipped themselves into the newer channels, right? It could be the digital channels like SMS, WhatsApps, and IVR, and lately there are voice agents being used, and then there are dialers for the calling agents, and some field app for the field agents. But all of these, even today, are working in silos. That's the problem, right? There has been adoption to the newer technology, but it's not being used in the way that it needs to be supposed to be used, right? Everything is running in silos. But if you think about it from a borrower's angle, right? Previously, borrower used to receive a message, a SMS from the lender, but today the borrower is receiving an SMS, a WhatsApp, a voice call, a voice agent, a human calling, and someone showing up at the door, all happening at the same time. So there is no control on cost at all. and the system is becoming more inefficient as we scale. Is how though there is an adoption, it's not being applied in the right way. Like that's the challenge that I see today with all the lenders that we are working with.
Anand, let's shift the lens now to DPD0. If you take a typical lending portfolio, say thousands or hundreds of thousands of borrowers across different delinquency buckets, how does the platform help lenders manage that more effectively? It would be great if you could help our listeners understand this to an example.
No, perfect. So let me take a step back and explain our concept and thesis on why we started DPD0, right? Post our journey at Setu, we got acquired by Pine Labs, and then me and my co-founder Ranjit, we were thinking about how can we further chase the dream that we had, which is to drive access to credit, right? By not building another Setu, right? We knew a lot of lenders because we had launched the loan repayments category on BBPS. So when we went around asking, right, and talking about what else could lead to accelerating credit penetration in the country, we understood that credit sort of works on four important pillars, right? The first pillar is called capital, right? So capital is the raw material required for a lending business to operate, right? And if you look at that problem, there wasn't really a problem to be solved. There is enough capital present out in the country, so probably a bunch of investment bankers could solve that problem, right? It's basically debt raising. So we didn't see a play there. And then we looked at acquisitions, which is the second pillar, right? How can you acquire the customer at the lowest cost? And this was at the peak of 2022 when we wanted to start something of our own. And fintech was at the focus, right? So every VC in the country had invested in fintech lenders, right? And they were essentially solving for the acquisition problem, right? So they had an app, and data penetration was scaling faster than ever before thanks to Geo. Smartphone penetration had crossed. So that was already too crowded, and hence we thought, we can't add much value because there are way too many players, and way too much capital available, and that problem is being addressed, right? The third one that we saw was underwriting, right? In underwriting, because there was the new scale of AI coming in, we thought that we could use a lot of alternate data and reduce the tat of decision making, right? So that was a idea that we explored. And what we understood was, when we started going deep with one or two customers, that all the lenders want to keep their underwriting policies very close to the heart, right? And sort of like a black box. They didn't want to expose the formula, and hence it would always turn out to be a one time service rather than productizing the entire thing altogether, right? So hence we thought, okay, that doesn't have a scope to scale, right? And finally we looked at collections, right? Even there it was the last thing that we looked at.
Right.
So collections was very interesting, right? So when we spoke to a bunch of lenders, we understood that these collections are being done by what we call as the collection agencies, right? And when we looked at it from a macro perspective, there were roughly about 30,000 collection agencies spread across the country. And these agencies operate in a very gray area, right? Where compliance, there is nothing called as compliance, and whatever happens there cannot be monitored, and everyone just says that, hey, you know what, do whatever it takes but get the money back. There is nothing called as technology that is present with these agencies, right? It's complete brute force. And when we looked at it, what was shocking for us is India is $1 trillion in the retail credit, and is this industry depending on these agencies to ensure collections is not a problem, right? So that was the biggest shocker that we had. And because we came from building Bharat bill payment system, which is like a infrastructure for bill payments to happen, we thought, why is there no infrastructure that's available for collections? Because collections is the most important thing. You can lend all the money in the world, but if you can't collect it, business doesn't sustain. And if you're not able to collect at scale, then you'll never be able to scale lending. So that's when we decided that if anything that needs to be solved today, that leads to accelerating disbursals in the country was collections. Collections had to be reimagined. Collections needed an infrastructure, and collections had to get that push the country has never seen in the past, right? So hence we picked collections, and what we decided to build was a full stack collections platform that will simply integrate with all the financial institutions and help them run collections on autopilot, right? One single API where they push data into the platform and money comes back in return. That is the experience that we want the financial institutions to sort of experience, right? So at the core of a platform, right, it's an omni channel collections platform. It integrates all the way from a low cost channel like an SMS to the voice agents that we've built right now, and also brings in the human angle to it. It integrates with all of these channels and orchestrates the collections across these channels to ensure that the lenders get maximum efficiency, best borrower experience, and low cost of collections, right? So that's how we broadly look at our platform. The lender plugs in and money comes back in return, right? That's what we are doing at DPD0 today.
And then just to double click on this a little, right? Let's say I am a lender and I want to track the borrower life cycle across all the delinquency buckets, right? Just walk us through what happens for a customer once that customer say enters past you all the way to being completely marked as an NPA. How does your platform basically take care of all those stages in the borrower's life cycle?
So let's take an example of a lender, right? Someone who is disbursing a personal loan, right? The lender
Sure.
will push the data onto DPD0's platform, right? So lender has nothing to do, just one single API, and they push data of those borrowers that needs to be collected, right? And as soon as the data hits our platform, what we have built is a AI decisioning model, right? What we call as an allocation model, right? This allocation model sort of consumes all the data points that we get from the lender about the borrower, right? So it could be the past repayment behavior, it could be the disbursal information, it could be the FOIR ratios. All of those data points is consumed, and along with consuming the conversational data that we have, the allocation model decides how each and every borrower must be treated. And as soon as the decision is being made, the decision is orchestrated into different channels, right? So let's say if it's a high intent borrower, right, we send those borrowers into a voice AI channel, right, where our voice AI agent interacts with the borrower and tries to negotiate for a payment. If we see it's a low intent borrower, right, we send them to our human calling channels, right? So wherein the human agents that we have on our platform negotiates and gets the money out, right? So that's how DPD0 does both technology and the operations part of it to ensure that the borrower is paying back, right, while ensuring the experience is great. So that's how DPD0's platform work, and that's how the lender has nothing to do, but money is coming back in return.
Just to go a little bit deeper then on this one. So
Mhm.
that means, say, in the start, the data comes to you, understood. After that, across all channels, and I'm assuming because your channels, the way you covered is limited to digital plus telecalling. So most probably people who are DPD 30, DPD 60, and maybe not beyond that because they're extremely low intent, maybe physical visit might be required, or you just mark them as NPA till that point of time. So once it is sent to you, you will take care of all these approaches to do it. And then what would be your revenue model? Are you charging per collection that you're managing or a percentage of the collections that you are doing? Not the exact numbers, but just the model.
So we are a complete outcome based revenue model, right?
Understood.
So no one pays us for input,
Hmm.
everyone pays us for money that's being collected, right? And that rate sort of differs based on the delinquency stage, right? If it's a early delinquent borrower, which means the effort is lower, right, so there is a
Hmm.
different take rate that we charge. And if it's a deep delinquent borrower, the effort is going to be higher, right? So because the borrower has lesser capability to pay, and you will have to engage with them for a longer period of time, hence
Correct.
the take rates are going to be higher, right? So but
Mm.
it's a standard take rate, and it's a complete outcome based pricing that we.
Understood. So the risk on the cost related to channels like WhatsApp messaging, the telecalling person, etc., is all being taken care by you, and the
Absolutely.
client only pays for whatever is recovered from the customer that you given to you. Okay,
Absolutely.
understood. Understood. Now, since we are at a stage where Ananth, as much as we try and soon becoming cliche, but we cannot avoid AI, and you have touched the allocation model any which ways. So, can you just help us understand across DPDzero, the platform that you built, what are the areas where you're leveraging AI and you're seeing the maximum impact as far as it goes?
So one of the very important stages, right, that we have seen the impact of AI is in persona identification. Okay.
Hmm.
So let me take a step and explain that, right? So broadly, we have categorized the defaulters into five different personas, right? And these are, for example, there is a supportive defaulter persona, right? Supportive defaulter is someone, I had a very recent example to share, right? So there was a credit card customer of a bank, and he had changed his mobile number, right? And that mobile number was sort of linked to the credit card that he had taken during the time of getting a credit card. And because he was not able to get support from the bank to change the mobile number into the new mobile number that he has taken, he decided not to pay the credit card bill so that someone is going to contact him, right? And that's a supportive defaulter persona, right? This is a large one, right? So because they're not able to get the required support from a bank or a NBFC, they tend to miss their EMI so that they're contacted back. And then we see a bargaining defaulter, right? Bargaining defaulter is someone where I have been a customer of this bank or NBFC for the longest period of time, but this is the first ever time that I have missed my EMI, right? And I have been added a 500 rupee penalty for that, right? So they take it little personally, and they want that penalty to be waived, right? So that is a bargaining defaulter persona. And then we have a circumstantial defaulter persona, right? So these are the genuine cases. India is like one medical bill away from being default. That's how I see it, right? And if someone has lost their job, and if someone is going through a medical emergency, so they fall into this circumstantial defaulter persona, where you can do whatever you need, but it's impossible to sort of get money from them, right? So where we see alternate sources of education, right? So we say, hey, can you sort of dip into your PF and pay back your loan so that you don't have any liability against you, right? So we give them many options that a lot of people are not aware of at all today. And then there are the escapist defaulters, right? So these are very tricky ones. They tend to pretend as a good borrower, and then they ghost you, right? They block your numbers, they block you on WhatsApp, right? Because they cannot say that I cannot make a payment, they tend to say yes and they avoid you, right? These are the escapist persona that needs to be treated in a very different way. And then finally you have your intentional defaulters, right? Intentional defaulters are, they've just like decided that they're not going to pay you back.
Hmm.
And specifically when it's unsecured credit, there is nothing you can actually do when someone decides not to pay you back, right? So here we see some borrowers actually convert because we educated them, right? So a lot of the new age borrowers or the NTC borrowers who are coming on board from like tier 2, tier 3, which is where the majority of volumes are coming in, they sort of think that, I took a loan from this app, and I stay here somewhere in Mandya, which is like a tier 2 city in Karnataka, and no one knows where I am. So I'm just going to uninstall the app and not pay them back, right? That's the mentality of a lot of NTC borrowers in tier 2, tier 3, right? Who fall into the intentional defaulter category, right? And here we just like educate them, right? So we speak about all the consequences that can happen if someone doesn't pay back, and mostly they all come back and pay, right? Because they were simply not aware on what could happen to them, right? And the other part of intentional are the real tricky ones, where you have to show up at their door, right? And when you show up at their door and you speak to them in private, that look, why are you doing this to your life, right? And explain this in person, there is a big delta that happens there as well. So one of the areas that we are personally seeing a great advantage is persona identification. Because in the country, what I believe is maybe 1% of borrowers are bad. The 99% of the borrowers are good. But the problem in the industry is the 99% is treated like the 1%. So if you are able to identify who these borrowers exactly are and treat them in the right way, the result is going to be great even for the financial institution and for the borrowers, right? So this is one main area where we sort of use AI, and that's a great advantage for us. And what we then do is the orchestration part of it, right? So we have our AI agents talking on voice and WhatsApp, right? So all the supportive defaulters and the bargaining defaulters are actually handled by our AI agents, right? So they're talking to them over the phone or on WhatsApp, wherever they're available, and with a solution, right, on how do you get the payments done, right? The remaining three sets of defaulters, which is the circumstantial and the escapist and the intentional ones, are handed over to our human calling agents. And at DPD0, we refer to them as advisors, right? These are the collection advisors. That's the second place where we sort of, third place where we use AI, right? All these advisors in the normal world today, right? So they call up a bunch of people randomly, etc., right? But here, the advisors just log in into our software, right? This is an AI powered calling software, and no one decides who to be called, right? The AI decides which borrower needs to be contacted first and connect them to the advisor, right? And the advisor is able to see all the information about the borrower, right? So the past, the present, and we do real time sentiment analysis using AI. So we know what is the sentiment of this borrower. Is the borrower wanting to hang up? Is the borrower trying to escape? Is the borrower really emotional right now? So based on all of these sentiments that are being analyzed, the advisor is being fed with real time AI prompts, right? On how do you tackle this borrower, right? So, what are the best ways to tackle based on the emotion that the borrower is going through, right? So, that's another place that we are using AI. And all the conversation is summarized by AI and auto logged as an activity, right? So, today, if you see in the normal world, everyone is typing in disposition. This is what the borrower said. I need to call them back, so and so. There's so much of human error that happens when a human is trying to enter so much of data, because the problem is that the human agents have to keep doing more calls, right? So they tend to make a lot of mistakes, and that we have completely automated by using AI, right? No one does any typing at DPD0. AI understands the conversation summary and it logs in the right details that is going to be used again on what needs to happen next. Final part is our AI QA agents, right? So today, all the calls have to be audited because we are in a regulated industry, right? And what happens is sampling, right? In QA today, what happens is the concept is called sampling because you can't QA 100% of calls. And at DPD0 itself, we are generating about 2,200 hours of calling data every single day, right? It's impossible to audit all the calls by a human, and that's where we have our AI QA agents coming in that audit all the calls as soon as the call is done. We get two benefits out of this. One benefit is we understand exactly what went wrong and what went right. And if there is a problem, we are able to address the problem proactively than wait for a borrower to escalate later. And two is we understand what are the gaps of these advisors that we have, right? Where exactly do they need training? And we train them continuously based on the gaps that we find, right? So I think that's broadly how across the life cycle we use AI in every single journey, right? So right from identifying the profiles, talking to them on voice and chat channels, and enabling our advisors by automating it completely, and queuing all the calls in real time, right? So today, that's how our AI use cases are being deployed.
Very interesting. Now, Anand, when you talk about collections in India has historically had a reputation problem, sometimes because of aggressive tactics used by the agency. But over the past few years, RBI guidelines around digital lending and collections have significantly tightened, as we spoke about. How have these regulatory changes reshaped how lenders think about collections? And where does a platform like DPDzero, yours, helps lenders stay compliant while maintaining the strong recovery that you spoke about? How is it doing that balancing act?
Yeah, like what you said, right? In the last 3 years itself, RBI has been very serious about collections, right? So there are multiple things changing in the industry drastically that's actually helping us. It's a big tailwind for someone like DPD Zero, right? So on one side, RBI is going on regulating this industry, right? So they brought in guidelines like you have to call within a certain timeline, right? So 8 a.m. to 7 p.m. is the defined timelines to call a borrower. Previously, there was no timeline. Someone was even being called at 12 a.m. in the night, and no one could do anything about it, right? And the second one that RBI has now come up with is that every single human who is interacting with the borrower from a collections perspective has to be DRA certified, right? And this is a certificate that is actually issued by IIBF after completing 120 hours of training that an agent has to go through in order to clear that exam, right? And the exam has to be cleared. There is an exam that needs to be attended after the 120 hours of training to clear, right? And that's when you're certified to interact with the borrowers, right? And all the communication has to be recorded and logged and maintained for 6 months, right? So these are some of the newer regulation or the compliance requirement that RBI is making mandatory, right? That's happening on one side. It's a regulatory push. On the other side, think about the borrowers as well, right? So in the past, borrowers were not available on internet, right? But today, internet has become the most easiest mean, and probably hundreds and 200s of millions of Indians are today on Instagram. Previously, if something unethical happened to the borrower, they could do nothing about it, right? And hence the unethical practices went on happening, right? Today, borrower has access to internet, borrower has access to social media. They can go escalate it immediately. Within minutes, a video can go viral. Today, they're able to tag an RBI and an MD of a bank and write an email to them, right? Social media is viral. On the other side, this is a big change that is also happening. So hence this industry is being pushed into how can companies come out with a full stack capability, having compliance baked in into the processes and software that can give the banks the ability to scale and consolidate, right? How we see is that in the next 3 to 5 years, the fragmented agencies are going to get consolidated because they will never be able to be adopted or equipped onto the technology channel, right? They can't build it. And secondly, they are only known for the practices that they carry out today at the last mile, right? And those practices will never be entertained anymore. So there is going to be a lot of consolidation that will happen, and there will be 3 4 large players in the market that are going to exist, who's going to consolidate this. And again, it's not going to be a monopoly, because the banks never want to have a risk scenario, right? They always want to de-risk. So they will want to work with 1 2 3 players, so that they're always de-risked, and there is no concentration risk. So I think that's how the regulatory environment plus the changes in the borrower ecosystem is going to push for a consolidation that's going to happen for this fragmented industry. That's where we also see an advantage that DPD Zero is going to play a big role in consolidating the entire collections ecosystem.
Anant, last year you raised your Series A, and there's a significant amount of growth that has happened for DPDzero in the past couple of years. Can you talk about a couple of success stories for lenders where you've seen big turnaround in terms of collections, etc.? That would be good.
So we look at 3 value adds for our lenders, right? So Our primary value add is we pride ourselves with zero escalation, right? So compliance is the biggest value add that we sort of bring on board today, right? Zero escalations is something that we pride about. The second one is a collections efficiency, the efficiency uptick, right? So
Right.
let's take an example of a personal loan portfolio of 1 to 30 DPD, right? Today, if a lender is doing 85% in collection efficiency, what that means is 15% is flowing into losses, right? With DPD0, the lender is able to reduce that loss by up to 20%, right? There's a 20% straight reduction in the loss rates that the lender is able to see. And lenders are also able to see 15% of cost reduction, right? So like I told you, today lenders are operating all the channels simultaneously in parallel, right? The cost is so high, but with DPD0 is able to utilize the channels based on the borrower's response, and we use the right channel, right time to the right borrower, so we are able to use lesser channels to get a conversion done. So we pass on this benefit to the lenders as well, and we have reduced costs by about 15%. So those are broadly the three areas where the lenders or the partners who work with us have seen value: compliance, higher efficiencies, and cost.
Anant, what does the collection stack of the future look like if you have to say crystal gaze into the future, say 5 years from now, especially in markets like India where digital credit is still expanding rapidly?
See, it has to be a full stack.
Right.
It is going to be a full stack, right? And it has to be a integrated full stack solution for collections, right? So not just a full stack. Full stack can mean that I have all the channels including field and legal, and I'm going to use it to drive collections, right? But how I see it is, it needs to be a integrated full stack solution that's driven by intelligence, right? Because
Yeah.
that's the biggest missing piece in the industry, right? So the newer players, and I think there are going to be newer players like us who are going to enter the industry with a technology advantage and an operational muscle. Both is required, right? This industry will always have people, according to me, because the hardest borrowers have to be knocked on the door. And if the lenders truly have to outsource their entire portfolio, lenders should also have that confidence that partners like DPD0 must come with a full stack capability, right? You will not stop after you do an AI call. You will not stop after you do a human call. You will not stop after you go visit the borrower at the door, and you will not stop until, if you have to take a borrower, the intentional defaulters, to the court, you should be able to take them to the court. That's when lenders will see partners like DPD0 as a true partner for end-to-end collections. Also, the borrowers must be respected. The borrowers also, right? There is a fine balance, how I see it, right? On one side, if you see, lenders will always want the maximum collection efficiency. On the other side, today the borrower is like forgotten, but
Right.
the borrowers also needs to be treated like humans, right? That's the thing that really hurts me, right? They're also people, they're also humans. Today they're being treated like criminals. Anyone who defaults is a criminal, right? They're not criminals. They have to be treated like people. And the newer companies should focus on maintaining this balance. How do you deliver the maximum value to the financial institution, and how do you still make sure that empathy is maintained for these borrowers? Maintaining this balance, whoever maintains this balance is going to, I think, flourish in this industry.
And Anand, finally, what advice would you give to fintech founders building lending products today? How should they start thinking about collections from day one?
There's one new concept that we are speaking to all our lenders very lately, right?
Right.
Can we do collections based lending, right?
Interesting.
What that means is, first you figure out your infrastructure, right? Where you want to lend, markets that you want to lend to, right? Figure out the infrastructure, and once you figure out the infrastructure, you lend into those markets. So that is, I think, the change that needs to happen. Because if you see the lending apps in the past, right, the fintechs who started lending, they started disbursing everywhere first and then trying to find infrastructure, which is why the NPS were north of 15% also
Right.
in a lot of fintechs,
Right.
right? That is not scalable. And a lot of fintechs think, one of the real important advice that I want to give to a lot of fintechs If you are building a fintech lending business, it is not a VC hyperscale game. It is a pure balance sheet game, right?
Correct.
If you are not aligned to build the business patiently with a long term horizon, right? When I say long term, I'm talking about 15 to 20 years. If you're not aligned with that, do not do this. That's the like very simple advice that I would like to give anyone who wants to do this. A lot of new founders that I meet personally, they all come with this idea that I'm going to integrate with alternate data, I'm going to throw in an app and keep disbursing, right? So this is a very different business. Lending business is very different. It's not an AI business, it's not a technology business. Lending business is a lending business, and it's a pure balance sheet play, and which means you have to make sure that the money is already being deployed in the right places, and you're efficiently able to collect, and profits are generated. Profit is a word that needs to happen in this industry from day zero, else you're gone.
Correct. Absolutely right.
Ananth, this has been a fascinating conversation. It's a great reminder that innovation in fintech doesn't just happen at the front end. Sometimes the most impactful changes happen deeper in the infra. Thank you for joining us on the show.
Hey, thank you so much, Hemant and Elroy. It was wonderful chatting with both of you.
To all our listeners, thanks for tuning in to another episode of India FinTech Diaries. If you enjoyed this conversation, do subscribe and share. We'll be back soon with more insights from the world of Indian fintech. Until next time, stay safe and keep building.